call the meeting to order, and as members certainly know, we're dealing with Bill C-86, Budget Implementation Act 2018, number 2. And this to start off this morning, we have officials from related to a number of areas in the bill. Part 1, Part 2, Part 3, and some of the divisions in Part 4, hopefully. So we'll start with Part 1, and with us we have from the Finance Tax Department, Trevor McGowan, Pierre LeBlanc, and Blaine Langdon. And I'll let you introduce people, Mr. McGowan, and you can start from there. I would remind members that when we're dealing with officials on the bill, we stick to questions related to that particular area of the bill. The more general and broader questions we will go to the minister on when he comes. So, Mr. McGowan, floor is yours. Welcome.
Thank you, Mr. Chair. I was going to go through each of the measures in the bill briefly in the order in which they appear. If it would be helpful to committee members, I could also provide the relevant clause numbering for each of the measures. I understand this is a pre-study and the packages haven't been sent. The first measure in the bill relates to what are called foreign divisive reorganizations and provide the appropriate tax consequences for a Canadian investor in a foreign corporation that essentially splits in two in a particular type of transaction. And that can be found in clauses 2 and 39 of the bill. The next measure amends the cross-border surplus stripping rules to apply appropriately and clearly in the case where partnerships or trusts are used in a cross-border structure. The cross-border anti-surplus stripping rules are an existing set of rules that prevent the extraction of retained earnings tax-free from Canada to a foreign investor. And these rules ensure that when partnerships and trusts are used in a corporate structure, that the rules work appropriately by essentially looking through the partnerships and trusts. These can be found in clauses 3 to 5, as well as 14 and 21 of the bill. The next set of measures.
Sorry, good morning, Mr. McGuire. Can you just repeat that last part? We're trying to write some details down as you're going, and it's a little fast.
To the bill.
Yeah, the parts of the bill. Just again, please. Sorry.
Of course, I would be happy to. For the first measure, the divisive reorganizations, it was clauses 2 and 39. For the second measure, the cross-border surplus stripping involving partnerships and trusts, that is clauses 3 to 5, so the 3, 4, and 5, as well as 14 and 21. The next, I'll combine them with the next two set of measures deal with foreign affiliate rules. There's a set of currently existing rules in the Income Tax Act that prevents the shifting of income on passive property offshore to a controlled foreign affiliate of a taxpayer. And if you have that kind of passive income held in one of your controlled foreign affiliates, it's taxable in Canada on an accrual basis, so every year. Recent tax planning techniques have evolved to use what are called tracking shares in order to avoid this accrual and taxation of passive income. And these measures would prevent the use of tracking shares to avoid the foreign accrual property income regime, both by artificially meeting a 5-employee test and also through the avoidance of controlled foreign affiliate status itself. These are found in clauses 6 and 7 of the bill. Also, another foreign affiliate measure relates to the rules for trading or dealing in indebtedness, and it essentially aligns the rules for trading or dealing in indebtedness with the rules that relate to investment businesses to better ensure consistency within the tax regime for foreign affiliates. And that is also found in Clause 7 of the bill. The next measure relates to the at-risk rules for limited partnerships, and it ensures that the currently existing at-risk rules for limited partnerships apply appropriately in a situation where there is a tiered structure of partnerships. That is to say, where one member of a limited partnership is itself a limited partnership, and it ensures the at-risk rules work appropriately in that situation. The at-risk rules restrict the deduction of losses and expenses by limited partners of a partnership to the amount that they, in effect, put at risk in the partnership. So if you invest $100, generally speaking, you can deduct up to $100 of losses in respect to the partnership interest. And this ensures that the rules work appropriately where there are multiple tiers of partnerships. It is found in Clause 8 of the bill. The next measure relates to tax relief for Canadian Armed Forces personnel and police officers on international police operations, and it allows international police missions to be eligible for the purposes of a deduction from income tax that is available for Canadian Armed Forces members deployed on certain designated international missions. And it is found in Clause 9 of the bill. The next measure.
So members are clear where they're at. That would be Part 1F that we just dealt with, so people are on track. Okay, thanks.
The next measure relates to artificial losses using equity-based financial instruments. These amendments tighten up and improve upon gaps or weaknesses in the currently existing rules that prevent the creation of artificial losses by primarily financial institutions on certain equity-based transactions. Sorry?
Just one mic down further. There you go.
Yeah, thank you, Mr. Chair. Just coming back to Clause 9, assessed for risk allowance at level 3 or higher, or assessed at a risk score greater than 1.99 and less than 2.50. Can you explain to us how that then allows for the deduction and what the risk score is based on?
Do you want to?
Sure. Thank you for the question. Or
We'll go with the question. The way we normally proceed is just make a note of the question as we go through, Peter, and then come back to it. And there's no limit on the amount of time for questions. People have to be satisfied where we're going in each section, but go to this one now.
Thank you, Mr. Chair. We are dealing with the largest omnibus bill in Canadian history, so I think it may be a better way to proceed if we can intervene. I appreciate your flexibility on that.
All right, we'll see where we go. We'll see how much there is as we go along. Go ahead, Pierre.
Thank you for the question. So missions are assigned a risk score by the Department of National Defence. Up until 2017, those both members of the Canadian Armed Forces and police on missions that were basically high and medium risk scores were able to have a deduction for the pay associated with that missions abroad. Now, in 2017, the government announced, and so effective tax year 2017, the deduction is available for all members of the Canadian Armed Forces and police on missions designated by the Minister of National Defence or his designate, regardless of the risk score. So it's now the thing is that covers this measure is basically ensuring completeness. It ensures completeness because some police are not on missions, basically are not on D&D missions. They're on missions that are designated by the Minister of Public Safety and Emergency Preparedness. So, and they're not, those individuals aren't covered by the current legislation, either back to 2012, so when a high risk score or a medium risk score was required, or now that no risk score is required. So it's making sure they're covered as well. So in other words, if police are on a police-only mission that's designated by the Minister of Public Safety and Emergency Preparedness, they'll also be eligible for the tax relief.
Don't mind a follow-up, Mr. Chair, but then I don't understand why the risk score is defined in the legislation. If what you're saying is all operational missions would qualify, which I think is something we would all support.
It's basically to ensure that the measure applies appropriately in a retroactive manner, because if you look between 2012 and 2016, a risk score was required under the law for any sort of mission, whether it's a Canadian Armed Forces, but the legislation doesn't cover that in its current form for where the mission was designated by the Minister of Public Safety and Emergency Preparedness. So it's just to provide assurance under the law that those missions are covered. So both under the old regime, which required a certain risk score up to 2017, and from 2017 on, where the risk score isn't a factor.
Thank you. Go ahead, Mr. McGowan.
Thank you, Mr. Chair. I had started discussing artificial losses using equity-based financial instruments. This measure relates to tightening up and improving upon gaps or uncertainties in the currently existing synthetic equity arrangement and security lending agreement rules that had been used by taxpayers to, in essence, create artificial losses by deducting the same expense twice, the same amount twice, and primarily financial institutions. And these improve upon those rules in order to prevent inappropriate tax planning that can lead to the generation of artificial losses by financial institutions. Those are found in clauses 10 and 27 of the bill.
27 or 10 and 27?
10 and 27.
Go ahead, Peter.
If you don't mind, Mr. McGowan, if you could give the clauses first and then explain, I think that would be easier for us, because then we can follow along, as I say, this massive tome, which is the largest omnibus legislation in Canadian history.
Happily. Thank you for the comment. So the next measure is found in clauses 10 and 16 of the bill. And it's a similar measure dealing with stop-loss rules on share repurchase transactions. And again, it prevents financial institutions from generating artificial losses in off-market securities transactions that involve the repurchase of shares and the utilization of the intercorporate dividend deduction, as well as the mark-to-market property rules to effectively deduct the same amount twice in situations where they're redeeming a fully hedged mark-to-market property and generate artificial losses on those transactions. And this would ensure that a double deduction is not available, although of course the single deduction would continue to be available to reflect the economic reality. The next measure is found in clause 11 of the bill, and it relates to eligibility for the Canada Child Benefit in respect of certain provincial kinship programs. It ensures that the receipt of amounts under these provincial kinship programs will not, in and of themselves, disqualify an otherwise eligible recipient from obtaining the Canada Child Benefit. It ensures that the benefit is available in appropriate circumstances, including where amounts are received under a kinship program by an individual in respect of the care of a child who is not the biological child of the individual. It corrects a potential technical interpretation that could arguably disqualify individuals from receiving the Canada Child Benefit in that situation, and ensures that it's available where appropriate.
Sorry, Mr. McGowan, can you just give me an example as to when this popped up as being a problem? Was this from Quebec? Was this from other provinces?
I believe this issue was raised by the Canada Revenue Agency in their application of the program, where they asked, well, there's a rule that says you can be treated as a child of an individual in the Tax Act if you are, amongst other conditions, like you're not the biological child, but the child is wholly dependent upon you. And so the question that was raised was, well, can you be considered to be wholly dependent upon an individual when the individual is receiving these amounts under these kinship programs for the care and maintenance of the child? And so an interpretive question arose about whether or not you're wholly dependent in those circumstances. It was, I think, raised by the Canada Revenue Agency. And the correct answer, of course, is that, well, yes, you can still be considered to be wholly dependent upon the adult in the kinship programs, even if you're receiving amounts under these provincial programs.
Providers program, and basically to provide short-term living arrangements for children in need of protection. And so it was this program, among other programs, I think triggered the sorts of questions that Trevor just answered for us.
Thank you.
Anything else in that child benefit section? Kate?
The next measure is found in clauses 12 and 35 to 38, so 35, 36, 37, and 38 of the bill. It relates to improving access to the new Canada Workers Benefit. Budget 2018 announced the introduction of the Canada Workers Benefit, which replaces the former Working Income Tax Benefit. The first budget implementation bill of 2018 contained the introduction of the new CWB, as well as the enhancement of the program relative to the former Working Income Tax Benefit, and also announced that it would be available even in situations where an individual had not applied for it. Previously, there was a requirement to obtain the Working Income Tax Benefit that an eligible individual would have to apply for it by filling out Schedule 6 on their tax returns. That, unfortunately, led a lot of individuals who qualified, were eligible, but just didn't know about the program maybe, and didn't fill out the correct form, and simply because of that, they were not obtaining the tax credits to which they were entitled. So this measure would ensure that even in situations where a qualifying individual does not apply for it, does not apply for the Canada Workers Benefit, the Canada Revenue Agency would be able to assess the individual as qualifying for the benefit and provide it to them so that it's available for all Canadians who are eligible to receive it. I'll just mention quickly, just to fill out the clause numbering of the bill. Clauses 13, 18, and 19 contain measures relating to the mechanism for delivery of climate action incentive payments. My understanding is that will be discussed by a separate committee, but I wanted to fill out those clause numbers so there's no gaps.
Repeat the, sorry.
So,
can you repeat the clauses again, Trevor, please?
Those were clauses 13, 18, and 19 of the bill.
Mr. McGowan, just don't want to bounce back, but we'll have to, on the Canada Child Benefit one that you explained, which would be H in our summary, but in the more extensive document on page 3, it says this amendment will be deemed to have come into force on January 1st, 2008. Is that correct?
Yes, that is correct. It ensures that the measure works appropriately, and as I said, this interpretive issue is dealt with appropriately, going back 10 years, which aligns with the the period for being able to retroactively go back and claim credits.
Okay.
The
As long as it's a plus, we don't mind. Go ahead, guys. Sorry.
And the next measure is in Clause 15 of the bill. This measure builds upon a measure introduced in the first budget bill of this year dealing with passive investment income earned by private corporations, and it ensures that in a very particular situation where losses from a previous year are carried forward to offset taxes under Part 4 of the Income Tax Act, which are fairly rare because you usually don't use loss carry forwards to offset Part 4 taxes because they're refundable and you get them back when you pay dividends. But if you do, and if the offsetting of the Part 4 tax would have an impact on both your new non-eligible refundable dividend tax on hand pool as well as your more flexible and valuable eligible refundable dividend tax on hand pool, this would ensure that the optimal result for taxpayers is achieved by first reducing the amount of the non-eligible refundable dividend tax on hand account balance, so the less favorable one for taxpayers, before starting to touch the more favorable eligible account. And this clarifies some uncertainty in the application of the rules for a fairly limited number of circumstances, but it does provide the optimal result for taxpayers. The next measure can be found in clauses 17 and 20 of the bill. It relates to charities and their political activities. The measure would allow charities to carry on political activities without regard to specific limits, provided those activities are ancillary to and incidental to the fulfillment of its charitable purposes. The next measure is found.
Greg?
Read this through, please, before we move on.
Sorry.
Charities and political activities were clauses 17, that's the main clause, and 20 of the bill. 20 is a consequential amendment.
Mr. Deltel.
Thank you, Mr. Chair. May I speak in, well, I will speak in French, not
Go
me,
ahead.
but I will speak in French because it's very technical. D'abord, j'aimerais savoir, est-ce qu'on...
Are you talking about the section on charities and political activities? Yes.
C'est très difficile.
It's very difficult to define what a charity and political activity is, whether it's partisan or non-partisan. So what does the government plan on doing in order to specify exactly what a charity is? I mean, we more or less understand what a charity is, but that spends 10% on their resources for non-partisan political activities. How do you define specifically what that 10% is? And secondly, what a non-partisan political activity is? Because based on my experience, it's almost impossible. But I'd like to hear what you have to say about it. Thank you for the question. I'll answer your question in English with your permission.
Just to clarify what these what these amendments actually do. So currently, the requirements of the Income Tax Act are that an organization, a charitable organization or charitable foundation, must spend at least 90% of their resources on charitable activities and can devote, by virtue of that, up to 10% of their resources towards political activities. What these amendments actually do is, in fact, remove that restriction and allow charities to spend as much as they would like on political activities, provided that they're in furtherance of their charitable purposes. So just to be clear that that's the effect of these amendments. So there will no longer be a 10% limitation placed on charities under the Income Tax Act. In terms of the defining of what constitutes a charitable activity and a political activity, I think that, and in particular, what constitutes nonpartisan versus partisan, I think over the next couple of months, we'll be working with the CRA to provide some guidance for the sector and for professionals as to what exactly that means. There is pre-existing guidance on what constitutes a political activity and a nonpartisan political activity. It will have to be revisited in light of these amendments, but that's our task over the next couple of months.
Okay, so
Mr. Deltel, and then we'll go to Mr. Julian, and then Mr. Sabar. Deltel.
donc si je vous ai merci, Monsieur le Président.
Thank you, Chair. So if I understand correctly, you'll pass that, but you will rewrite the guide to that will deal with the amounts. But until that guide is rewritten, is there a specific definition of non-partisan activities? Will the existing regulation apply until it is rewritten?
Again, setting out precisely what this bill does. Currently, there's a limit on how much political spending or activities a charity can do, the 10% limit. It's actually expressed in the legislation as all or substantially all of your activities can't be political, and all or substantially all. The rule of thumb, the general rule for that is it's commonly interpreted as 90% or 10%, so that's where that number comes from. You won't actually see 10% in the bill. There is currently a prohibition even within that rule that allows for up to 10% of the activities of a charity to be political in nature, that says that those activities cannot be partisan in nature. That's a currently existing rule in the Income Tax Act, and that's not going to be changed. So what is being changed is essentially the 10% limit. So whereas previously you could spend up to 10% of your resources on these what you might call political activities, but they couldn't be partisan political activities. Now that 10% limit is lifted, but the requirement that they be non-partisan is maintained and is currently found in the law. So that's not something new that's being introduced by this bill.
Okay. Just make a final comment on that. As far as I'm concerned, based on my political experience, no partisan political activity is not existing. Every time you do something, you're partisan. I will just give you one example. For the last 3 years, I had the privilege to be member of parliament. So now, after 3 years, I know exactly which organisms are working, and as everybody knows, we can give publicity to give some money to organism. And that year, in a specific event, there was no publicity. They didn't ask me to give some money of my budget to give to the member of parliament, not me, but the member of parliament would give some money. So I was surprised. And they said, well, because you're a conservative, we don't want your money. And I said to them, hell, I'm not a conservative. I'm your member of parliament. This is your money. I want to help you. And they said to me, no, you're a Tory. I don't want your money. So it was supposed to be a very friendly, good, great, harmonious activity. And for them, it was a political event. So I can tell you, based on my experience, I've been in politics for the last 10 years, it's impossible to describe exactly what a political activity is partisan or not.
Mr. Julian.
Thanks, Mr. Chair. I appreciate the explanation, but I'm left a little bit perplexed now because the actual wording in the budget bill is for charities or sports amateur athletic associations that devote any part of its resources to the direct or indirect support of or opposition to any political party. That would seem to me to indicate 0% of resources can be devoted to political activities, depending on how you define indirect support of or opposition. So I'll give you a case. We have a pipeline going through my area. People are livid about it. There are a lot of environmental charities that are raising concerns. They're opposed to the pipeline for very legitimate reasons. The moment that they tie in the Liberal government or Mr. Trudeau to that, it would seem to me to pass that line of indirect support of or opposition to any political party. So it seems to me very unclear, but I don't see this increasing the ability for political activities, but rather eliminating any possibility for political activities, depending on how indirect support of or opposition to any political party is defined. Devil's in the details here.
Yeah, so I'll try and clarify a little bit the existing state of affairs and speak a bit more about the example that you've just raised. So under under the current rules and under charity law, political activities, there's really two types, right? So there's the nonpartisan type of political activity, which would be the support or opposition to a change in law or government policy or something like that. So this is what these amendments are effectively designed to create some space for. So we're removing the restriction. Currently, charities are restricted to only devoting up to 10% of their resources in opposition to, as I said, some policy proposal or support of a policy proposal or change in law. The concern being that charities felt unduly restricted in being able to provide their expertise to members of Parliament on particular issues that were of importance to them. So these amendments are designed to remove those restrictions and allow charities unlimited ability to carry on political activities in furtherance of their charitable purposes. The other type of political activity which is currently prohibited for charities and will be prohibited under the new rules are any activities that involve the direct or indirect support or opposition to a candidate for public office or for a political party. So those will remain prohibited. So just to use the example that you gave, for an organization that was, for example, established for the protection of the environment, and it wanted to raise its concerns about the pipeline or some other environmental issue, under these provisions, the charity would be allowed to do that and would be no longer constrained by the 10% limitation. To the extent that the charity went further and started to directly or indirectly support a candidate for public office or a political party on the basis of the same issue, that would be prohibited. And so, to get back to a previous question, I think the devil will be in the details. Obviously, it is certainly something that we are going to be thinking about and working on over the next couple of months to try to be clear what constitutes a partisan activity in that sense, what constitutes direct or indirect support of a political party or candidate for public office. There is some existing guidance on that, but we'll be focusing in on providing more comprehensive guidance for the sector with respect to that.
Thank you. How currently is indirect support of or opposition to any political party defined? Indirect. I think direct we would all understand, but indirect, how broadly is that defined currently?
I would say that currently there isn't comprehensive guidance on what that means. So the CRA does have a document, so it speaks to issues like obviously financially supporting a political party or calling for voters.
Well, that's direct support.
That's direct.
That's direct support, but indirect is, I mean, that's where it is completely unclear. And I think if you asked all of us around the table, you get 10 different definitions of what indirect support or opposition to a political party might mean. And so if CRA does have a clear definition of that available, it would be very helpful, I think, to this committee to get that current definition of indirect support, because this is written into the legislation. Mm-hmm. If it's unclear now where that line is, that concerns me. Yep. Because once it is not clear, it could actually mean a reduction in the ability of charities to speak out on issues they care about, rather than an increase.
Yeah. What I would say is, again, this is a pre-existing provision, so we're not changing that restriction. So we're not adding the words indirect. I would flag that. I mean, it is a very good question and a very good point. It was these amendments follow the recommendations of the panel on political activities by charities, which was commissioned by the Minister of National Revenue. One of the issues that they did identify was the lack of clarity around the concept of indirect support or opposition for a political party. So we are definitely looking at that issue. We'll be happy to provide the existing guidance for from the Canada Revenue Agency, but certainly it is something we're looking to develop, and we will be developing this, I think, in consultation with the charitable sector to provide some clarity around those rules.
Is that something you could provide to us this week?
The existing rules?
The CRA existing
Absolutely.
Definition of indirect support or opposition?
As I said, the guidance is relatively short, but I'll provide what they have.
Thank you.
Provide that through the clerk, Mr. Langdon, and all members will get it immediately. Mr. Sabara.
This may have been clarified, or maybe not. I'm not absolutely sure, but I do want to ask either way. On page 13 of 19, when we're discussing charities and political activities, when it says, as a result of these changes, charities will be entitled to carry on political activities without regard to specific limits, provided that those activities are ancillary and incidental to the fulfillment of charitable purposes. I read that and I think of a big hole. Like that, to me, leaves a lot of leeway in how one would interpret that. And if I was at CRA reading that, I would say, how would that be either fulfilled in the sense that how am I supposed to police it, if I can use that term, Trevor and Pierre and Blaine? How do I define it? How would I look at a charity? That to me, that statement there is so open-ended that it's contradictory in the way I read it. That you are saying that they're allowed to entitled to carry on political activities without regard to specific limits, but the activity has to be ancillary and incidental to the fulfillment of charitable purposes. Is there anything quantitative around that, or is there anything tangible that will provide direction to the individuals having to look at those charities?
Yeah. It's, I think, a key principle that is and underpins the current legislation, and that will remain true under the proposed legislation, is that charities have to be constituted and operated for exclusively charitable purposes. Now, there are four main heads of charity: the advancement of education, the relief of poverty, the advancement of religion, and other types of activities that have been determined to be charitable by the courts. And those would include environment, human rights, health. So now, any activities, nonpartisan, public policy dialogue, that is considered to be in furtherance of those charitable purposes, I mean, would be considered as long as, so those are the means, but as long as the end continues to be the furtherance of those charitable purposes, then it'll be permitted under the legislation without limit. So, I mean, just by way of example, I mean, it'll be for the Canada Revenue Agency to determine specific cases, but so as we mentioned, one of the four heads of charity is relief of poverty. So if an organization decides that, you know, most or, you know, pretty well all of its activities are that changes in existing laws is the best way to achieve its stated charitable purpose, which is relief of poverty, then that, and it's done in a nonpartisan way that avoids both direct and indirect partisan activity, then that's permitted. The legislative proposals are intended to encompass, to allow that activity.
So would a charity that is is looking at arguing for a better environment, which we all argue for a better environment or advocate for a better environment, does not like a certain source of energy usage, would they have here no specific limits in terms of what it could advocate for?
I wouldn't want to predetermine how the CRA is going to interpret what an activity in furtherance of a charitable purpose is, but what I would say in response to that is, if you have an organization who's advocating for a change in law or change in policy that is determined to be in furtherance of a charitable purpose, yes, that could be their main or sole activity.
Thank you.
Mr. Fergus.
Tous mes collègues autour de la table.
All my colleagues around the table have brought up similar questions, and so what I'm going to say really is a comment rather than a direct question to you, to our officials. I was involved with a charitable organization to have more flexibility in the legislation that existed at the time. And the suggestion that my colleague from Ontario has raised is precisely the reason that I sought change with this charitable organization. It's precisely that, environmental groups that wanted to have the opportunity to but I mean, what are they going to do as charities if they want to be in favor of a greener environment? Yes, they might advocate for the file itself, for the matter itself, but are they going to advance their needs? Are they going to convince Canadians to adopt their position? Well, that was interpreted as political activity in that they had gone beyond their 10% limit. It was really, in a word, too restrictive in terms of the situation. That is why they dealt with the previous government to discuss with them, and the present government as well. They ultimately reached the conclusion that you have to be much more flexible. Certain charities are dedicated to political activities, but they are not partisan activities, and there is a difference. I think that the draft that was proposed, the text that was proposed, and this is why I'm speaking to this now, it was a good attempt to address the issue. That's what you have done. But there will be very specific individual cases that might exceed the limit. And I'm quite sure that the agency, that is to say the CRA, is going to restrict their activities, and things will be dealt with in due time, in due course. But if you are against the death penalty, for example, well, at a certain point you have to promote your interests, and will that be considered partisan but not political?
Answer? Or whoever. I mean, the intent, I understand, of this section is to try and address the concerns of charities who were fearful their advocacy work was going to cost them to lose their charitable status. Is that correct? That's the bottom line simplification.
That's correct.
And so these measures are being put in place to address that concern.
Thank you, Chair, and thank you for your comments. That is correct. I mean, there was an issue with the existing, often considered 10% threshold, and that if a charity otherwise in furtherance or pursuing its charitable objects for relief of poverty, advancement of education, or what have you, exceeded that 10% limit, and was doing so in of course, a nonpartisan way, the nonpartisan restriction, as we noted, the indirect or direct, the prohibition against indirect or direct support of a specific political party or candidate was maintained from the currently existing rules. As we noted, these amendments generally follow the recommendations of the commission that had been studying and provided recommendations on charities. I say generally because, of course, this bill maintains the rule against indirect support of a political candidate. But yes, it allows for more flexibility and provides that charities won't automatically lose their status if they're engaging in just a bit too much political activities.
Mr. Julian, you wanted in?
Si. Oui. Je vais juste répondre à M. Fergus parce que là,
I just want to answer Mr. Fergus. We're talking about two separate issues here, two separate things, a change in the Act as written, and we are really not talking about a definition of how you can get involved in partisan politics. Partisan politics is very easy to define. If you say, for example, vote for this person, but don't vote for that other person, that's very clear. But the reality is when we talk about indirect support, it's much murkier. It's uncertain. And there's a part here that is really unknown to us. CRA has a definition. It is their definition that concerns me. It is not an indirect partisan political activity is much more vast than saying, if I were to draft it, indirect political activity. I could live with a phraseology like that with this change. But in terms of CRA's definition, power to define, I'm very concerned. If I look at my riding, the definition of Canada versus the disabled persons tax benefit or the child benefit, it depends on how you see it. And I think that has to be looked at closely again, Chair, in this bill, because it is precisely what we are looking at here today. That power is being given to Revenue Canada. They will hold the power to define what political, indirect partisan political activity is, and that concerns me greatly. I just want to register my concern.
I have Larry, go ahead. Mr. McGuire.
Thank you, Mr. Chairman. Thank you, witnesses this morning, for coming in and providing these overviews. But just, Mr. McGowan, I was just heard you indicate, I'm looking at the same section here, charities and political activities, and it more or less says, as a result of these changes, charities will be entitled to carry on political activities without regard to specific limits. And in regards to the 10% rule, you indicated just a moment ago that it could be, it's there, but it could be just to allow some charities to, I believe your quote was, a bit too much political activity. How do we define that? I guess is the concern. I know there's rules that are there, as my colleague had just indicated here a moment ago. How do you define that political activity? Is it cost of airline tickets to get to Ottawa to lobby someone, or is it how is it determined? To put their view forward, because that might be restrictive, I guess, in some cases. And I guess the other one is that I just, rather than saying, well, why don't we go to 20% and have a definitive number as opposed to a bit more political activity, it just doesn't seem very definitive to me.
Sorry, if I can maybe answer for Trevor. I think when Trevor was referring to the concerns expressed by organizations that they would lose their status if they carried on a bit too much charitable activity, he was describing the previous state of affairs. So what the current amendments do with respect to nonpartisan political activity, again, promoting or opposing a change in law or change in policy, coming into the House of Commons to meet with members of Parliament, et cetera, et cetera. These amendments remove entirely those restrictions. So there will no longer be a 10% limit. There won't be a bit more than 10%. It can be up to 100% of their activity. So promoting a change in law, as long as it does not move into partisan support or opposition to a political party or candidate for public office. So just to be clear about that. And I guess in terms of defining those activities, I think you're quite correct. I mean, if an organization was coming in to lobby a government official and spending money in terms of a plane ticket and hotel costs, those would all be considered to be activities spent on what's now defined as public policy development activities in the Act.
And just to follow up, so all of these, like, it goes back to 2008, as the chairman had pointed out earlier, and so will companies be able to go back, or organizations, I should say, it's not companies, will organizations, charitable organizations, be able to go back the 10 years and re-examine what's already occurred?
Yeah, I think the intent of the provisions is or the retroactive nature of the provisions is to provide some fairness to organizations that were audited and have been determined to be offside in terms of political activity rules, that they have the ability to benefit from this change in policy. That's the reason why it goes back to 2008 is that there are audit years that are under consideration going back that far. In terms of an organization that is not necessarily subject to an audit by the Canada Revenue Agency, I think they would be able to, if they so determined, to go back and review their activities for those years. There certainly wouldn't be any bar to that.
Thank you.
All done. Ms. Rudd.
Just a quick clarification. Peter mentioned being uncomfortable with CRA being able to make the determination about sort of what is or what isn't, but CRA does get to make those decisions now. I mean, that is within the scope, so there's no real change here. They've always been able to make those decisions, correct?
Yeah, so there's no change to that portion of that rule. So it is currently the case that the CRA would be responsible for determining whether or not an organization provided direct or indirect support to a political party or candidate for public office. So that doesn't change that. I would say that the CRA's general approach to an organization that is under audit is an education first approach. So they would generally advise the organization as to what activities are offside, give them an opportunity to correct their non-compliance before they proceeded to anything harsher.
Yeah.
Mr. Julian.
Thank you, Mr. Chair. I mean, given the fact that this week we're dealing with CRA ripping away benefits from a variety of Canadians and Canadian families who actually have the right to those benefits but don't have the resources to fight CRA, I would disagree with any assertion that CRA is being kind to regular folks, and given the number, size, and scope of court cases that have resulted from concerns around the charitable sector, I think it's fair to say we should be worried about this. This is a change. It does leave a second part, I understand, and appreciate your testimony to say that, but we will need, I think, Mr. Chair, to grill the CRA on both their past history in terms of definition around indirect so-called partisan behavior and how they intend to act with the changes in this budget bill. And that may be something. We're already stretched in terms of witnesses, Mr. Chair, but it seems to me to clarify this, it would be good to have them come forward too and explain how they define this and why there have been so many problems in this definition.
you'll have that opportunity if you so decide. I believe there is go ahead. You didn't want anything, Mr. LeBlanc? Okay, next point. Mr. McGowan.
The next measure in the bill is found in Clause 18, and it relates to the reassessment period for non-resident, non-arm's length persons. For this one, it might be helpful to add a bit more precision. It's found in subclauses 18 sub 2, sub 4, sub 5, sub 7, sub 10, and sub 12. There's more than one measure in Clause 18. That's because it deals with reassessment periods, and there are a few different measures dealing with that. So I just wanted to add a bit more precision there. It deals with reassessment periods for non-resident, non-arm's length persons. These you might think of as transfer pricing reassessments, where you have a transaction between a Canadian entity and a non-arm's length non-resident, and that gets reassessed. The current rules provide an additional 3-year reassessment period in respect of these transactions. Another existing rule provides another additional 3 years where losses are carried back. As I'd mentioned earlier, discussing Part 4 taxes, losses in 1 year can be carried forward up to 20 years, and germane to this point, can be carried back 3 years. And so if an assessment is made that affects the losses in a particular year, those losses are reduced, and those losses had been carried back to a previous year, then the Canada Revenue Agency currently has the ability to reassess in that previous year, purely as a consequential to the assessment, the transfer, or the assessment within the normal reassessment period. So you have these two additional 3-year reassessment periods, and what this measure does is that it ensures that they interact appropriately, so that if a taxpayer is reassessed within the additional 3 years for transfer pricing, so transactions with non-arm's length non-residents, and had carried back that loss prior to the additional 3-year reassessment period for transfer pricing, then the CRA would be able to make a consequential assessment relating to that reduction of a loss within the additional 3 years for transfer pricing. So it ensures that the additional 3-year periods for non-arm's length reassessments and for the assessment of a consequential assessment of a loss carryback apply consecutively instead of concurrently, but limited to those very specific circumstances. The next measure.
What problem are you trying to address in the one you just read, in the reassessment non-residents and non-arm's length persons? What's the problem area you're trying to address?
It's a little bit complex, but I think that a simple example might help. So if you have a transaction with a non-arm's length non-resident, the Canada Revenue Agency currently has an additional 3-year reassessment period, so they can go back a little bit further to reassess. So let's say the taxpayer had claimed a $100 loss, and as a result of this reassessment within the previous period, that was reduced to a $40 loss. So $60 of the loss had been denied. Now that entire loss had been carried back 3 years, as is permitted, to offset income by the taxpayer in an earlier taxation year. Now normally the rule would say that, okay, if your loss is reduced and you in a particular year, and you'd carried that back 3 years or up to 3 years, even if that previous year that you'd carried it back to is outside of your normal reassessment period, you've got an additional 3 years. The problem was, if you had an assessment because that was within the extended period for transfer pricing assessment, so it was already within an additional 3-year period, and you carried it back to before the start of that additional 3-year period, then the CRA would be out of time. And even though the clear policy in the Act is that, well, no, if in a particular year your loss is reduced and that's carried back to offset income in a previous year, then the CRA should be able to go back to that previous year and make the appropriate adjustments.
Okay. Yeah, I understand what you're getting at now. Mr. McGuire had a question. They'll get it.
Yeah, thank you. Just in regards to, these are the carrybacks, like the going back an additional 3 years. Just in regards to the normal, what is the normal assessment period that they can, reassessment period that they can go back? That goes up to how many years? It's 7, or is it?
It depends on the type of corporation, but it's usually 3 or 4 years.
Oh, okay. And so then this gives them another 3 plus 3 in some cases?
That's right.
Yeah.
And again, limited only to the specific facts where it's been granted. So if you go back to an earlier year, that's only to deal with these loss carrybacks, not just generally opening up that previous year.
No.
Thank you. Then going to the next point.
The next measure, again, is found in Clause 18 of the bill. And more particularly, it's found in subclauses 18 sub 3, sub 6, and sub 11. And it relates to another reassessment period in respect of foreign affiliates of a taxpayer. As we just discussed, there's an extended 3-year reassessment period where a Canadian taxpayer gets reassessed in respect of a transaction with non-arm's length non-residents. A lot of the times transactions with foreign affiliates would be caught into that, but not every transaction involving foreign affiliates is subject to this extended reassessment period. The measure would extend the reassessment period in respect of all transactions involving foreign affiliates of a taxpayer by 3 years in order to align it with the currently existing reassessment period for transactions with non-residents. The next measure relates the next measure is found in clauses 22. Oh, I'm sorry.
Just a very quick question. So it extends it by 3 years to a total of?
Again, it depends on the type of corporation, but if the normal reassessment period is 3 or 4, it would be 6 or 7. So the next measure relates to is found in clauses 22, 23, and 24 of the bill, and it relates to reassessment periods and requirements for information and compliance orders. As we've discussed, the Canada Revenue Agency has a limited amount of time in which to provide a reassessment of a taxpayer, and what this measure would do is essentially stop the clock on the computation of that period of time while a requirement for information or a compliance order is being contested. And the stop the clock period would start at the point when the requirement or order is contested and finish when it's finally disposed of, so that the time spent in court with respect to these orders and requests do not reduce the amount of time that the Canada Revenue Agency has.
Chair? Trevor, in part 1, and I'm following along on both the document we're giving here, but also on the summary from A, and I think you're on P now. And I didn't want to just ask this individually for each one. These are a number of tax measures. Is there a cumulative tax expenditure outflow or inflow from all these changes with related to part 1? Is there something that we're looking at that is material in terms of a change in a certain tax expenditure due to any of these enactments of these tax measures?
Yes, if you're asking for a table showing the revenue, the impact on government revenues for each of these measures, it's found in the tax measures supplementary information that accompanied the budget on page.
Thank you.
Page 6, and it sets out how much each measure is expected to either raise or cost the government.
Okay, ironically, I have the thick book of the budget, but I don't have the thin book is back in my office. So thank you for pointing that out.
The next measure is found in Clause 25 of the bill. It relates to the reporting requirements in respect of foreign affiliates. Currently, taxpayers have until 15 months after the end of their taxation year to file what's called a T1134 form that provides information in respect of their foreign affiliates. The general requirement to file a tax return is 6 months after the end of the taxation year. This measure would extend or would reduce the amount of time to file the T1134 reporting form in respect of foreign affiliates from 15 months after the end of the taxation year to 10 months after the end of the taxation year, which provides the Canada Revenue Agency with additional time to provide needed analysis and risk assessments in respect of these types of transactions, while still balancing that with the needs of businesses to have enough time to prepare these forms. There will be a transition period where the deadline will be 12 months, and that applies for taxation years that begin in 2020. And then starting with taxation years that begin in 2021, it will go to 10 months. The next measure is found in clauses 26, 28, and 29 to 33 of the bill, and it relates to sharing information for certain criminal matters. Currently, the government has obligations under its tax treaties and other international bilateral agreements to share information with its partners, and what this measure does is, or the income tax portion of this measure does, is it first allows the provisions of the Mutual Legal Assistance in Criminal Matters Act to be used with respect to the sharing of criminal tax information under Canada's tax treaties, tax information exchange agreements, and the Convention on Mutual Administrative Assistance in Tax Matters Act. So where those would require Canada to provide tax-related criminal information to its treaty partners, the process for sharing information under the Mutual Legal Assistance in Criminal Matters Act would be used. That involves first the Department of Justice doing an analysis to make sure that the request for information from one of our partners is appropriate, and it involves the going to court for an order to obtain the information, at which point the court would decide if would ensure that the request for information is both appropriate and also that the privacy rights, including those provided under the Charter, are satisfied. Then, after the information has been gathered, pursuant to the gathering order that would have to be obtained from the court, the Crown would have to go back to a court for a sending order so that it could be sent. And at that point, the court would ensure that the terms of the gathering order had been followed, that the privacy rights had been respected, and that it would be appropriate to send the information to Canada's partners. So what it does is it builds a process using the Mutual Legal Assistance in Criminal Matters Act for providing information under these types of agreements. The second of these measures permits the disclosure of taxpayer and other confidential tax information to Canada's bilateral mutual legal assistance partners and pursuant to administrative agreements entered into with a requesting state under the Mutual Legal Assistance in Criminal Matters Act. And this is for the purposes of certain non-tax criminal investigations and prosecutions of certain serious crimes like terrorism, organized crime, designated substances offenses, and some proceeds of crime and money laundering offenses relating to these designated offenses. And again, it would provide an appropriate mechanism for the sharing of information with Canada's treaty partners.
Is Mr. McGuire and then Mr. Julian.
Yeah, thanks, Chair. Just wondering how many requests for this confidential tax information, for these purposes of non-tax criminal investigations does CRA get in a year?
I don't have that information with me. I would have to check and get back to you on that.
I just wondered how, what kind of volume that it's looking at, and the seriousness of some of the natures. But yeah, thank you.
We heard some about this on our Money Laundering, Terrorism Financing Act review for sure, in terms of the need for sharing information. Mr. Julian.
Thank you, Mr. Chair. I'm interested in just a brief summary of how orders made under the Mutual Legal Assistance in Criminal Matters Act work currently with these changes that would be put into place. What is the current process?
Currently, there's no. Currently the Mutual Legal Assistance in Criminal Matters Act is used for other types of offenses, but there is not currently an explicit process in place for providing this information, this kind of information relating to criminal tax offenses. So this would introduce an explicit process where one is not currently in place.
Thank you.
Next measure. One left.
The last measure in Part 1 of the bill can be found in clauses 34 and 40 of the bill. It relates to the tax treatment. So yes, 34 and 40. It relates to the tax treatment of Quebec pension plan contributions. And so as is the case for contributions under the Enhanced Canada Pension Plan, a deduction would be made available for the enhanced portion of contributions under the new Quebec Pension Plan.
That goes through all these sections in your area. Is there anything going back over the whole lot? Mr. Sabara and then Mr. Julian.
I'll go from. Thank you, Mr. Chair. I'm going to say summary point, part 1, point H, ensuring that social assistance payments under certain programs do not preclude individuals from receiving the Canada Child Benefit. I take it because the Canada Child Benefit is so transformational in my humble view and is making such a big difference in the lives of the families in my riding. This measure here would just mean that if individuals are receiving payments of a different program or another program from a different level of government, say the provincial government, that they would not be precluded from receiving the CCB.
Yeah, the idea is, so under the Canada Child Benefit, there's a definition of what's a child. Yes. And a child has to be wholly dependent on the parent, or generally the parent or the person receiving, eligible to receive the Canada Child Benefit. Now, as we described, so as in relation to Mr. Fergus's question, you have, just as an example, the PEI, Grandparent and Care Providers Program. So when those people are stepping in and helping to care for a child that needs a secure home, they're receiving some financial assistance from the government. So that raises question of, is that child wholly dependent on the caregiver in that case? So it's just to because that's how the current legislation reads. So it's just to ensure in those cases that either the grandparent or other carer is eligible to receive the Canada Child Benefit in respect to that child.
Okay, so it improves the flexibility of the overall program. Okay, thank you, Chair.
Thank you. I have two questions to wrap up, though I think we'll all keep open, Mr. Chair, the possibility of going back to these sections as we work through each one of them. Sometimes they're interrelated. The first is coming back to the working tax benefit. The ability that is granted to CRA to assess and grant the benefit. My understanding is it's not an obligation, so it would still be up to a CRA to choose to access. It gives them a possibility but there is no obligation for them to do that in the case of somebody who qualifies for working tax benefit. If you could clarify that and perhaps direct us to the exact clause. We went over that section slowly, but I would appreciate being directed directly to it. The other question is the question I asked on Tuesday night, which is the total number of clauses and subclauses in the bill. I don't know if you've had time to look into that, but that would be appreciated as well. Thank you, Mr. Chair.
Great. Thank you for your questions. I can answer the first. On the working income tax benefit, which will become the Canada Workers Benefit, I mean, the measure the CRA will calculate it for if someone is eligible, and CRA has determined they're eligible, and that individual has not claimed what will be the Canada Workers Benefit as of 2019. By filling out Schedule 6, the Canada Revenue Agency will calculate the amount and will pay out the entitlement.
Can you direct us to that clause?
Sure, I might get.
I apologize. I should have asked this when you went over it, but
I think if you look at clause 12, sub 4, and that's the provision that creates a deemed overpayment of tax. The Canada Workers Benefit is a refundable tax credit, and the mechanism for providing refundable tax credits is that you have a deemed overpayment of tax. You're deemed to have paid too much tax, and once you've paid too much tax, the Canada Revenue Agency gives you a check or pays you the amount of excess tax you're deemed to have paid. That's the mechanism for how these refundable credits work. And so you'll see it provides that just an eligible individual who files a return of income, so you have to have filed a return of income and be otherwise eligible, is deemed to have paid at the end of the taxation year an amount equal to the total of, and then it's the amount for determining the amount of Canada Workers Benefit you get. So if you qualify, so you're an eligible individual and you filed your tax return, then you're deemed to have paid this extra tax and you just get the credit. So there's not a discretion built into there. If you meet the conditions to apply, you're deemed to have overpaid tax, and then you're entitled to the credit.
And under the existing provision, there's a requirement that's deleted under the amendment that the individual has to claim the amount. So in that, by virtue of that being removed, then in combination with what Trevor just described, the CRA can pay it out.
Yeah, thank you. Yes, thank you. And the other question, clauses and subclauses, how many? Do we know?
I'm sorry, there are 40 clauses in Part 1 of the bill, and...
No, sorry, I was talking about the overall. I did raise it on Tuesday night, and so if you don't have the number, that's okay. We'll just, I'll keep asking. Thank you. Thank you.
House yesterday as well. So somebody might eventually have to come up with the answer to that question. Peter? Okay, I think that completes that section. Could we then, thank you very much, gentlemen.
Thanks. Yes.
For your presentation and your answers, then we'll ask people to come up on Part 2 and Part 3. They might as well come up together. I understand both. Some of them are on both. Mr. Ives, Mr. Mursell, Mr. Colom, and Mr. Mursell again. Do we have their titles here?
I do somewhere. That's one, that's another one.
Part 2.
Monsieur Coulon is on the first page, I think.
Okay.
If you want to see his title.
And just while they're coming up, Mr. Ives is the Senior Advisor, Sales Tax Division. Mr. Mursell is the Director General, Sales Tax Division. And who am I missing? Mr. Kalam is Director, Sales Tax Division. And that's them all. Okay, just before we go to this section, for next Tuesday on our agenda, where we're next to Tuesday, the 6th, we had the Minister of Finance scheduled for on this bill from 4:30 to 5:30. He would be appreciative if we could deal with him from what time did I say?
3:30, 4:30.
3:30 to 4:30 on the Budget Implementation Act, and then from 4:30 to 5 on estimates, because we're running out of time on estimates. Is that okay? And the officials would be here for their hour in addition as well. 3:30 to 4:30 on next Tuesday, November 6th, for the Minister on Bill C-86. 4:30 to 5 on estimates, because we're running out of time on that. And then 5 to 6 would be officials from the department on the bill and estimates on the bill. We okay with that?
Just for clarity, there's only a half an hour for the estimates?
Yes.
With the Minister?
Yeah.
And an hour for the bill?
Yeah.
Which is basically
normal
discussions anyway?
Yeah.
Okay.
All right. It just changes it a little bit. We didn't have them in here on estimates, and we really should take the opportunity to question the Minister in estimates. That's part of the problem. If we don't do it soon, we're not going to be able to do it. It'll be automatically accepted under the rules.
Actually extends his testimony from 1 hour to an hour and a half.
Yeah.
Yeah. And
but it is in two separate things, and we'll have to try and dis.
Well, there's a lot of latitude, as you know, Mr. Chair.
Yeah, there usually is.
Yes. So.
Okay. Agreed. Then welcome, folks. Part 2 and 3. I guess you, Mr. Marcel. Pierre, go ahead.
Okay. Alors, bonjour.
Good morning. Part 2 amends Part 9 of the Excise Tax Act in order to implement GST and HST measures. Amendments start at Section 41 and end at Section 60. Amendments in Part 2 are basically technical amendments. And generally speaking, make small improvements to the GST, HST rules so that they are better aligned with the tax policy intentions.
The first measure was referred to another committee. It's the measure that says who is responsible for the tax to be paid on carbon emissions. And the sections are 41, 44, 45, 48, and 53.
Is purely a timing rule, and it's found in Clause 60. So the measure extends the assessment period for 660.
On a sec, are we all clear in where we're at, I think? Yeah.
Yes.
Go ahead, sorry.
So the measure extends the assessment period for group registered education saving plan trust that have made a particular relieving and retroactive election under proposed regulation under the Excise Tax Act. So since the retroactive election would apply to period from July 1st, 2010 to July 22nd, 2016, The amendments ensure that the CRA is not statute barred to assess the past returns of the group RESP trust that make the retroactive and relieving election. The amendments allow the CRA 4 years from when these amendments are made into law to assess the GST-HST of these group RESP trust, but only in respect of the tax consequences of the election. The next measure deals with investment limited partnership, and I'm going to give you the clause number. It's 41 to 43, 46, 49, and 54 to 59. So the measure ensures that the GST-HST treatment
Yeah.
So the clause are...
C'est juste pour avoir encore...
Yes, I just want to hear the section numbers again.
46, 49, and 54 to 59. So the measure ensures that the GST-HST treatment of investment limited partnership is consistent with other collective investment vehicles by extending the special HST rules currently applicable to investment plans to investment limited partnerships. So investment limited partnerships, they generally include limited partnerships established to carry on investment activities on behalf of a group of investors. There are essentially 3 amendments in that respect. The first amendment ensures that investment limited partnership that have investors in one HST province and in at least one other province, that they determine their HST liability based on where the investors are located, as is currently the case for investment plans. These amendments also confirm the long-standing tax policy that management and administrative services are subject to GST-HST when these services are provided to an investment limited partnership by its general partner. Finally, these amendments generally provide a GST-HST relief to investment limited partnership, in respect of which 95% or more of the partnership interest is held by non-resident investors. The next measure deals with the federal rebate for printed books, and it's found at clause 47. Under the GST, educational and literacy institutions are eligible for a rebate of the GST or the federal component of the HST paid on printed books acquired for their own use in helping people learn to read and improve literacy skills. In accordance with the policy intent, the amendment clarifies that the rebate does not apply to printed books that are acquired by these institutions to be sold on their own or sold as part of another property or service.
Fergus.
Perhaps a silly question. What happens if a literary a group which is devoted towards literacy sells their textbooks or their books which are used to promote literacy to their clients?
If they sell the books for consideration as opposed to giving them away, those sales essentially should be taxable, and they're not supposed to claim the rebate in that respect. So when an entity buys and supplies books, normally the treatment that should apply is that they purchase the book, they pay the tax to their vendor, they claim input tax credits, they sell the books to an individual, they collect the tax from the individual, and they remit the tax to the CRA.
So if the student who is going in to learn how to read and they pay a certain amount to this organization to do so, if as part of their fees that they pay to be instructed how to read, if part of their fees includes the purchases of these books, then the organization would be able to claim the HST or perhaps the GST, HST.
So I'm going to clarify on your last point. So the book rebate that I'm talking about here is purely for the GST or the federal component of the HST.
Got it.
So in the case you described, the entity would not be allowed to claim the book rebate. So what is usually the norm is that when there's a supply of a course and a supply of a book, the books are supplied separately from the course. And the intention from the policy side was always, since the inception of this rebate, that if the book are to be sold for consideration, basically the book rebate is not applicable.
So I got that. I guess the question I'm asking, what happens if the cost of the book is covered in the cost which somebody pays for the course?
Yes, what I'm telling you is that the entity that's providing that course will not be able to claim the rebate in respect of those books.
No, but
I mean, you're satisfied with the answer.
but the answer is clear, but I'm not satisfied.
Okay, sounds good. That's normal around this town. Go ahead.
The next measure deals with reassessment period in the case of requirements for information and compliance order. This is found in clause 50 and 51. So the measure introduced a new rule to extend the assessment period of a person by the period of time during which a requirement for information or compliance order is contested. So Mr. McGowan explained that to you earlier in respect of Part 1 of the bill. So this measure is similar to the measure included in Part 1 of the bill in respect of the Income Tax Act, and the amendment to the GST legislation are made to ensure consistency between the various tax statutes. And I'm going to mention right now that a similar amendment is made in Part 3 of the bill in respect of various excise tax statutes.
Taking notes on my previous question, I didn't find out which clauses that this applies to. Can you please repeat that? It's entirely my fault.
Yeah, it's 47.
It's also 47. Okay.
No, it is 47.
Rebate for printed books was 47. The reassessment period was what?
50 and 51.
Thank you.
Okay.
Peter, Mr. Jolien.
Si vous pouvez nous donner juste quelques...
Could you give us a few examples of articles for reference so that we can follow? It's so complex. I know that you understand it very well, but for us to get through this document, it takes time. So if you could just give us a little bit of time to read after you point out the clauses, and I think things would go better.
Clause 52. So, again, in this case, this measure is consequential to amendment to the Income Tax Act in Part 1 of the bill. Similar to the amendments in Part 1 of the bill that Mr. McGowan explained to you earlier, the measure removes a restriction in Part 9 of the Excise Tax Act to enable the sharing of tax information with Canada's mutual legal assistance partners in respect of acts that, if committed in Canada, would constitute serious crimes.
On a combien de pays?
How many countries have signed a bilateral agreement on this, or are countries that are affected by these criminal matters? How many? I'm not sure I have the information here that I could give it to you that quickly, but perhaps I'll come back, if with your permission, with that information.
So as part of Clause 52, there's two other amendments, and they are proposed to align the GST HST legislation with existing rules under the Income Tax Act. First, the measure removes a similar restriction in Part 9 of the Excise Tax Act to enable tax information to be disclosed to Canadian police officers in respect of serious offenses, where such disclosure is currently permitted under the Income Tax Act. Second, the measure removes a similar restriction in Part 9 of the Excise Tax Act to enable tax information to be disclosed solely for the purpose of a provision contained in a tax treaty, and again, where such disclosure is currently permitted in respect of taxpayer information under the Income Tax Act. So I'm going to mention here that similar amendments are also included in Part 3 of the bill in respect of the Excise Act 2001. And this, again, is to ensure consistency among similar rules across various tax statutes. Et ceci conclut ma description des modifications.
This concludes my description of the changes in Part 2.
Last one, sharing of information. Has there been any discussions with the Privacy Commissioner on any of these sharing information?
There was discussion in respect of the main amendment that was in the Income Tax Act, the MLACMA, the Mutual Legal Assistance in Criminal Law Matters. I'm not sure about the last two I mentioned because they're just essentially aligning with amendments to the Income Tax Act, and I don't know when those were made in the Income Tax Act, whether the consultation happened.
Okay, thank you. Mr. Maguire.
Yes, thanks, Mr. Chair. I just wondered, you're talking about the mutual legal assistance partners. Is that countries I'm assuming you're talking with, and how many are there? What would the volume be?
Yeah, this is a similar question that Mr. Julian asked,
Yeah.
so I think we can come back to the committee with that response.
Okay, thanks.
And turn to Ms. Rudd. Turn to Part 3, what you didn't cover. Mr. Colon.
Merci, Monsieur le Président. Je suis aujourd'hui.
Thank you, Chair. I'm here today to speak to you about the measures that deal with the fuel tax and cannabis tax that are included in Part 3 of the bill that covers sections 71 to 78, rather 61 to 68, sorry.
Under Clause 61 of the bill, and it relates to fuel taxation. It is proposed that the excise tax refund in respect of diesel fuel used to generate electricity be expanded. The proposed measure was first announced as part of a broader consultation on tax legislative proposals in July 2018. The Government of Canada applies an excise tax of 4 cents per litre on diesel fuel manufactured in or imported into Canada. The application of the excise tax on diesel fuel is relieved in specific circumstances, including for use in the generation of electricity. At present, only licensed manufacturers and licensed wholesalers can buy and sell excise tax-exempt diesel fuel. Alternatively, end users can claim a refund from the Canada Revenue Agency under eligible purchases from other vendors. However, these situations may create cash flow issues from some end users and put other vendors at a competitive disadvantage vis-à-vis licensed wholesaler and licensed manufacturers. To level the playing field among all vendors, this measure amends the Excise Tax Act to expand the refund regime to allow a vendor to apply for a refund where a purchaser will use excise tax-paid diesel fuel to generate electricity if certain conditions are met. These conditions include, among others, that the quantity of diesel fuel delivered by the vendor to the purchaser be at least 1,000 liters, and that the purchaser certifies that the diesel fuel is to be used exclusively to generate electricity. This measure comes into force upon royal assent of the enabling legislation.
Any questions on that? Does this mainly apply up north, or is it all over where diesel is used to generate electricity up north? Does it apply there, or?
This is broader than just the north. You have all the municipalities, hospitals, farmers who have backup generators, and that measure actually was a request from the industry from the western provinces, where you have a lot of big generators that are
used for electricity for
particularly in rural areas in general. Yeah.
Okay, thank you. We okay? Pierre, Mr. Poilievre.
So is this a relieving measure?
Well, it facilitates the obtentions of tax-free diesel fuel for those who have small generators to generate electricity. So in that sense, it's a relieving measure. That said, it does not have a fiscal impact, since there was another relief that was available for end users, but they had to obtain the diesel fuel with the tax embedded first before claiming a refund. So as a result, you're kind of facilitating the distribution of tax-free fuel for the purpose of generating electricity, as currently provided under the law.
So they'll get the rebate even if the fuel was not taxed in the first place?
Well, with the proposed legislation, the vendor would be able to claim the rebate, and it is expected that he will sell the fuel on a tax-out basis to the end purchaser, rather than having the end purchaser obtaining the diesel fuel tax in and having to claim the rebate to the CRA. So it facilitates
It's just the point at which the rebate is secured, rather than a change in the
That's correct.
eligibility of the rebate. Okay, thank you.
Sorry, Larry?
Yeah, just to follow up on that, then it's more like the retailer paying the tax than the end user? Or am I reversed?
I'm sorry, I missed the beginning of the question.
Just thinking about is it the bulk retailer, the distributor of the fuel, or is it that's now paying the tax, or will, under the new act, under these changes, it'll be the retailer as opposed to the end user, or have I got it reversed?
The original payment of the tax remains at the production or at the wholesale level, as under the Excise Tax Act. This is the ability to claim the refund that is being shifted to some vendors who are not licensed with the CRA. And those vendors, because they are not licensed, were not able before to claim a refund for a tax on the diesel fuel used to generate electricity. Only the end users were able to do so. And with the proposed measure in that bill, those vendors who are not licensed will be able to claim the refund, and as such be on a level playing field with their competitors which are licensed wholesalers. It's quite technical in nature.
And there's no change then for licensed vendors?
For licensed vendors, there are no changes. They are still able to claim the refund and sell the diesel fuel without the tax being embedded.
And is this for like small users, small generators, or is it used by some of the industries as well?
Well, there is a threshold that has been put in the legislation, the 1,000 liters threshold. So we're talking about relatively
small generators.
Small, but yeah.
Small but necessary.
But necessary, yeah.
Okay, thank you.
Use a few of those in the odd storm, Larry.
Yes.
That's right. Okay, cannabis, I guess, next. Oops, sorry, I missed Mr. McLeod, sorry.
Mr. Chair, just a quick question. I just wanted to know how the number or the figure of 1,000 liters was arrived at.
Well, we consulted the Canadians and the industry with the thresholds. We needed a threshold to ensure that there was not avoidance or unintended diversions of diesel to taxable purposes. So that's how the thresholds was arrived at with consultations with the industry.
Then next section. See if we can get through part 3.
The second measure is found under clauses 63, 67, and 68 of the bill and relates to the taxation of cannabis. Let me tell you upfront that in respect of clauses 67 and 68, these are housekeeping amendments required to two provisions of the excise taxation framework for cannabis in order to ensure consistency between the English and the French versions of the legislation. So the main measure is found under clause 63.
Okay, go ahead.
Le gouvernement s'est engagé à autoriser.
The government committed to authorizing the reglementation of cannabis to keep it out of the hands of young people and to deal with the cost of the business itself. So you have to reach a rather low level working with the territories and the provinces. The 2001 Excise Tax Act sets out a new framework under the Budget Implementation Act number 1. The federal government has signed agreements with most of the provincial and territorial governments to set out a coordinated framework for taxing cannabis. To this end, regulations dealing with the rates for additional excise taxes have been announced on September 17, 2018. That framework entered into effect 17 October 2018 when medical cannabis was available and legally. There is now a combined federal-provincial tax that is applied on 2 rates, a uniform rate of $1 a gram or an ad valorem duty of 10% on the producer.
Amendments to the Excise Act 2001 to introduce an anti-avoidance rule relating to the rules for establishing the value of a cannabis product on which the ad valorem duty is calculated, to ensure that the cannabis duties are calculated on the appropriate value in certain circumstances. In particular, this technical amendment would ensure that the ad valorem duty applies as intended on the producer sale price of the cannabis product or on the fair market value of the product in the case of a non-arm's length transaction. To align with the announcement of the regulations, this measure is deemed to have come into force on September 17, 2018.
Just thank you, and we'll go to question, but the bells are ringing. So are we okay to, 29 minutes away, are we okay to continue on until 7 or 8 minutes for the final bell? Okay. Any questions to Mr. Colomb on this section? Greg?
A question? Why 17 September and not 17 October? For the coming into force of the changes. It's because September 17 was the date at which the amendment was announced. Okay, thank you.
Merci beaucoup, Monsieur le Président.
Thank you very much, Chair. I didn't see it, but I do think I know the answer. I'll ask the question anyway. Was the excise tax taken off medical marijuana or medical cannabis? You know, this was a question that was raised by some 200,000 Canadians in terms of this change in the budget, they haven't been refunded. And they've asked several members of Parliament to intercede to ensure that there's no tax applied to medication. But I don't see where the excise tax has been taken off. I presume that it will occur as this bill is passed. The excise tax that were included in the Budget Implementation Act 2001 under and the changes for the Cannabis Act dated last June have not been changed by the current bill. So the exemptions for cannabis products containing less than 0.3% of THC continue to be exempted from cannabis duty. But there are no other changes with respect to the framework, the regulatory framework that was set out earlier. So does that mean then that medical cannabis is still subject to excise tax? Currently, there is no different tax treatment. There's no different treatment for medical or non-medical cannabis in terms of excise tax. Certain products are exempted. For example, if you think about those products that have less than 0.3% THC, but that's the answer I can give you. Yes, but I'd like to have a direct answer, and I apologize for insisting on this. If cannabis has a higher rate, but it is prescribed by a doctor and it is used for medicinal purposes, is it subject to excise tax? Yes or no? Yes. Well, we have to look at the type of cannabis that has been prescribed, the content of THC, and if the product is subject to the excise tax system. If that, there would be something to be paid. But I would say that it is the producers who are in charge of dealing with the duties. The answer is yes. Yes. Thank you.
Officials to answer. You got your facts that you needed?
Oh, yes.
Okay,
thank you.
Good.
Thank you.
Thank you. Then turning to no other questions on the cannabis section here, then the next point.
So, Monsieur le
Reassessment period, I
Président,
guess.
oui, mon collègue Pierre Mercier.
My colleague Pierre Mercier has, and also Mr. McGowan has dealt with the measures dealing with an extension, the reassessment period, but I can tell you that for Part 3, that will refer to clauses 63, 64, and 65. And with respect to the sharing of information, that those measures can be found in clauses 66, as was explained by Mr. Mercier. The point of the amendments is to ensure a uniformity with respect to those measures that can be found in tax legislation overall, in terms of what has to be applied by CRA. That is the end of my presentation for this section.
General questions left over from parts 2 and 3. Mr. Polyev.
Yes, in Part 3, are there any changes to the applicability of HST with respect to carbon allowances?
This is not found under Part 3. This is an amendment that is found under Part 2, and I understand that it has been decided that this amendment be studied in front of the Environmental Committee.
And there's no need, let's just do a belt and suspenders and study it here too. Would this change, would this amendment apply HST to carbon allowance purchases?
I can respond directly, or I can do my little presentation on that measure if you prefer.
Sure.
No? Okay.
I think it's been transferred to the Environmental Committee. We'll let them deal with it. When it comes back to us, we may have to deal with it.
Can we at least get an answer to the question?
We can get an answer to this question, and then we'll leave the rest to the Environmental Committee.
The amount of tax on the sale of a carbon emission allowance is not changed by this measure. The measure only changed who is responsible for account for the tax. It used to be the vendor who was collecting the tax from the purchaser to remit it to the CRA. Now it will be the purchaser who will be responsible to self-assess the tax and remit to the CRA if there's a need to that. But I just want to add here to clarify that the purchasers of those carbon emission allowance are usually a business involved in commercial activity, and they would be entitled to recover the tax through the input tax credit mechanism.
Is it normal for a purchaser to remit a sales tax? Usually it's the seller that does that.
Yes, usually it's the seller, but there are situations in case of certain sale of real property where it's the purchaser who have to self-assess.
And this change affects the application of HST to provincial carbon credit programs, correct?
It changed which person has to remit the tax.
I understand that, but is it for provincial cap and trade programs that this?
It's for every system of emission allowance that is basically created by a government entity. So yes, it would apply to the sale that currently applied on the, let's say, the cap and trade system in Quebec.
And does it apply also to the federal carbon tax?
So the federal system, I think the only credit, I may be wrong, but I think the only issuance of those allowance will only occur, I think, in 2020 or something like that. And at that time, yes, it would apply.
I'll leave the rest to the Environmental Committee. Mr. McLeod.
I have to ask.
Sorry, Mr. Chair, this does have applicability to the budget bill. I don't see why we wouldn't be able to ask about this.
It does, but we've agreed by motion to turn certain sections over to the other committee. They will come back to us with or without recommendations. At that time,
but
we'll be in a position to debate it.
We'll not debate it, question it.
Or to question it.
But who are we going to be able to question on that at that time?
We will see what the other committees do. Mr. Julian.
Sorry.
Mr. Chair,
this is going to become a big problem if you don't allow some questioning on major sections of the budget here in the Finance Committee.
Mr. Chair.
Point of order, Mr. Chair.
Let's hear it.
Point of order. Yes, the budget is primarily the responsibility of the Finance Committee. In particular, taxation matters are the purview of the Finance Committee. If you'd frankly allowed me to ask 3 or 4 questions, you probably could have dealt with this a lot more quickly than you're going to have to face the problem now. There are some very serious financial questions around the application of sales tax to the overall carbon tax, and they are financial in nature. There would be no harm done if you were to allow members of this committee to ask some of those questions of the officials while they are here. Absent that, I don't know how we can proceed with a study of the rest of the bill, because frankly, it is we would be excluding from our conversation elements of fiscal and taxation policy that are clearly the purview of the Finance Committee. Now, there's nothing that would preclude the Environment Committee from asking similar or even the same questions. That's why I said belt and suspenders. I don't think there's any Canadian out there is going to be concerned that we overstudy the matter. You can pull up any motion you want, but the reality is we have the right to ask these financial questions in the Finance Committee. And the failure to allow that inhibits my ability to do my job in scrutinizing this massive omnibus bill that is before this and other committees.
We're not inhibiting your ability to scrutinize this. What we have done by motion is move certain sections of this bill to other committees, asking them to look at various sections. A lot of this has been turned over to the Standing Committee on Environment and Sustainable Development. They are to report back to us on recommendations or lack thereof. At that point in time, we will deal with what they report back to us. There's ample time for us to further study the bill and raise those questions at that time.
With who?
If we require some of these witnesses back when they report to us, then all the officials on all these sections, we can call them back. But
who's we?
This committee.
Right, the majority of which is Liberal and will vote against having those witnesses back.
No, I don't think you
We've got the witnesses here right now. Why can't I ask them questions?
I don't think, because we're not going to get into two committees doing the same thing. The reason the committee decided in its wisdom to firm out some of these sections is to do a better job and put it to the appropriate committee. And I understand what you're saying in tax measures. If it's necessary to bring witnesses back, we'll do that at that time when they have done their work and we've seen the evidence that these very same individuals have put before that committee.
Well, my point still stands. This is, as you admit, a taxation issue. A taxation issue would typically fall before the Finance Committee. We have the officials here right now. Why would we call them back to do another round of testimony when they could simply answer the question here and now? In fact, they would have answered the question here and now if you had allowed the question to be posed here and now.
Because we've already firmed this out to other committees based on the motion of the committee, and I'm going to leave it at that.
Well,
if you want to challenge the chair in my ruling, that's fine.
Sir, I have a point of order.
Okay.
And my point is not finished.
Well, let's hear it.
My point is that this is the Finance Committee. Finance studies taxation. This is a taxation measure. And I am asking questions about taxation. That is my job. I am the finance critic for Her Majesty's loyal opposition. It is my job to scrutinize tax policy. And it is the job of this committee to do exactly the same. This is a matter of taxation. We have officials from finance who are responsible for this taxation matter before us. I'm asking questions that might be uncomfortable for the government, but questions that need answering before Parliament gives approval for this bill. There is no reason why you could not allow 2 or 3 minutes for me to get answers to those questions. It would not seriously inhibit the work of this committee in any way, shape, or form. In fact, it would be much more efficient to do that than to call the officials back on a separate occasion, which you claim is a possibility if we don't get the answers today. As for the Environment Committee, I'm not interested. My questions are not about the recommendations the Environment Committee produces. You're right. The Environment Committee's recommendations may come back before us. I'm not interested in their recommendations with respect to this particular matter. I'm interested in answers about the effect of this legislation and others on the taxpayer. And you are preventing me from asking those questions. That is preventing me from doing my job as a member of Parliament. And so
I'm going to get into an argument with you.
I'm not asking you to. I'm making my point of order.
I've heard your point of order, and what I'm saying, I'm ruling against this is not what these witnesses came here prepared to talk about today.
Well, it is, in fact. The gentleman said he had his.
I'm not going to argue with you. I am ruling you out of order, and that's it.
Yeah. I have another point. Point of order, Mr. Chair.
Mr. McLeod.
Point of order, Mr. Chair. I have a point of order. I raise a point of order.
Well, let's hear your point of order, and if it's similar to the same point of order, I'm ruling it out of order.
Well, listen, I have no doubt that you don't want questions asked about this because they're very inconvenient for your government. And that is why you are exactly.
At order.
I'm sorry,
Mr. McLeod,
you are out of order, Mr. Chair.
You are at order.
Point of order, Mr. Chair. I have another point of order. I have another point of order.
Mr. McLeod.
Mr. Chairman. I have another point of order. Mr. Chair,
McLeod.
you are out of order.
Point of order.
You are failing to allow me to ask my question.
Mr. Chairman, my
point of order,
question is
Mr.
on
Chair.
part 2.
Point of order, Mr. Chair.
If I could go back to part 2.
Point of order.
Point of order, Mr. Chair.
Point of order,
Mr. Chair.
Mr. McLeod.
Point of order, Mr. Chair.
Assessment
Point
compliance.
of order,
I
Mr.
wanted
Chair.
to know.
Point of order, Mr. Chair.
Point of order,
Point of
Any
order,
part
Mr.
of
Chair.
that section
Point of order, Mr.
would
Chair.
have an
Mr. Chair,
impact
point
on
of order.
northern residency deduction.
Point of order, Mr. Chair. I have a point of order. Point of order is
Is it a new, Mr. McLeod, is it a new point of order or is it not?
Part one.
It is.
Because the
Let's hear
deduction
it.
will be under.
Yes.
Mr.
Yes,
McLeod,
but-
just hold on. Let's hear your new point of order.
Yes, but your question.
Just hold on.
Oh.
Let's hear your new point
Yes,
of order.
the witness has indicated that he has answers. At present, he is prepared to answer the questions that I am posing with regards to the HST application to the carbon tax. And given that he has those answers and he is prepared to provide them, as he has said before this committee, he is the one that said his documents are, he has documents here presently for which he can answer these questions. And I'm simply asking that he be allowed to do that and that he be allowed to answer my questions.
And I am saying we do not want to get into a situation. This committee, at a previous meeting, decided to farm out certain sections of the Bill C-86 to other committees. We need them to do their work first. They will report back to us, and then, because if we go down this road where we are doing the work before they have an opportunity to do it, we might as well not have farmed it out in the first place, and it'll be duplication. So we made a motion as a committee to farm those sections out to them. Mr. Marcel may be prepared to answer this question, but the next witnesses that comes before us on another section might not be. And I think when we have farmed it out to another committee, we've given them time to report back so that we can look at their recommendations and deal with it then. And that's how I'm ruling. I just think that's, Pierre, I just think that's fair.
Mr. Chair, I have to say, in general, Mr. Chair, you have been fair. You are a member of Parliament with integrity. On this point, we are dealing with a matter of taxation. All I'm saying is that on a matter of taxation, I'd be allowed to ask 2 or 3 questions in order to get clarification. I understand that you believe that some other sections should be studied by the Environment.
Okay,
I don't have a problem with the Environment Committee doing that.
Can we save some time here? Let Mr. McGuire in. I believe Mr. Julian wants in on this point of order, and Mr. Fergus, and then we'll see where we go. Mr. McGuire.
Thank you. I'm not a regular member of the committee, Mr. Chair, and it just seems to me that if we're dealing with taxation issues, we've got witnesses here today that can provide the answers, that it's a bit reversed. I would say that the answers to these questions should go to the Environment Committee before we worry about the recommendations to the Environment Committee coming back to the Taxation Committee, which is basically what this is. It's a Finance Committee, the House of Commons, and so I would think that it certainly would be much more clarity for even future or other committees to have answers to these questions so that they could deal with them at that point. It would be more information for them that might be duplicated, particularly when we've got witnesses here, and you've indicated that I believe it's Tuesday that the minister's coming?
Yes.
And so, therefore, there may be information that would be relevant to ask a minister or his officials at that time, and that limits us in our amount of time, given that this is the last committee meeting
Mr. Julian?
this week.
Well, Mr. Chair, I disagree with Mr. Poilievre on a lot of things, and certainly disagree with him on carbon pricing, but I do say I agree with him on being able to ask questions of ministerial officials. The motion that the committee adopted by a majority vote is a motion that does not exclude us asking questions of Minister of Finance officials. And if it had ever been framed as such, I think it would have been very difficult to pass that motion. So you're right to say, Mr. Chair, that there is some work that is going to other committees. They will not tackle it from the tax and fiscal perspective. And I don't think anybody is abusing this process. It's true, we're dealing with the largest omnibus legislation in Canadian history, and the timelines are ridiculous. But at the same time, I don't think anybody's abusing the process. We're trying to get the work done despite the a framework which is ridiculous.
Okay.
And so to be able to ask questions in a just a straightforward way, I think actually saves us time in the end, because otherwise we'll be doing a lot of procedural wrangling, and that serves nobody's interest.
Okay, I hear you, Mr. Fergus, was it?
Very much, Mr. Chair. First of all, let me just say to members who are new to the committee, this committee has had a wonderful reputation as not being very partisan and getting caught up in procedural issues. It's very rare that that would happen. Secondly, the motion did pass, Mr. Julian. Forgive me if my memory is wrong. It wasn't on division. It was actually unanimous, the procedural motion, which we had to make sure that we would farm out relevant items of the Budget Implementation Act, Bill C-86. So as a result, we're just going back on our own word that we all had agreed to doing. We will have an opportunity to come back. We can't say that this is a belt and suspenders thing and then call it an omnibus bill at the same time, or say it's a taxation bill.
Kim?
We need to have some, I think we just, we'll have an opportunity to go back.
Then I would prefer we go the other way, but if the questions relate just to tax matters, then I'm willing to take them, keep them short, to the point, and we'll move on. But I do not want to get into a situation where witnesses come before this committee and there questions raised that should be dealt with by another committee, because we did farm that out. But I'll try and be fair here, but we want the questions to stick to the fiscal issues related to this or financial issues. Go ahead. Raise your question.
Thank you, Mr. Chair, and I want to say that I found you to be
we go till 11:45. Oh, sorry. We'll have to go. I forgot about the vote.
Do you want me to come back to that? I know we're 5 minutes from the vote now.
No. We'll suspend and come back after the. How many votes is there? One. We'll suspend and come back to the vote. So meeting suspended. Then you can. And the floor is Mr. Polyev, and then we'll go to Mr. McLeod.
Thank you, Mr. Chair. I appreciate your good work, and I wanted to say thank you very much for giving me the opportunity to ask these questions. I've found you to be very fair in your role as chair, and so I'll go right through the questions then. You said that the HST applies to allowances of carbon emissions that exist in provincial jurisdictions where there's a cap and trade system. Does the HST apply then to the federal, the cost of the federal carbon tax in backstop jurisdictions?
So I don't want to restart the debate here, but the amendment in Part 2 is about carbon allowance. There's no amendment in Part 2 about carbon pricing in general. So I can talk to you about the application of GST-HST on carbon allowance, such as under the cap and trade system, if that's what you want.
So just very simple question. Does the HST apply to the federal price on carbon in backstop jurisdictions?
The only general answer I'm going to say is that the GST-HST is a broad-based tax that applies to a broad base of property and services. So essentially, fuel are subject to the GST-HST.
And your department has released a table estimating the cost of the carbon tax to the average family. Does that include the HST?
That I'm not prepared to talk about because I didn't. It's not my file.
All right. Mr. Chair, when are we going to get to a chance to ask those questions?
I expect the witnesses that will be before the other committee will be able to answer those questions, but once we see what they do, if we feel we need to bring those witnesses before this committee to relate to those kind of questions, we can do it.
Okay, so then back to the carbon allowances. The HST does apply to those allowances.
The GST-HST is a multi-stage tax that applies at every single stage when there's a supply, a sale, in the distribution process.
Right.
So those emission allowance would be subject to HST.
They are.
But as I mentioned, when they're sold between two businesses, so like I mentioned before, the businesses who purchase that are usually businesses that pollute, and basically they are involved in commercial activity, whether it's mining, maybe it's oil and gas or whatever, and these entities are considered usually exclusively in commercial activity, and they can recover the GST-HST they pay on the cost of those allowance to the input tax credit mechanism.
Well, anybody can do that with any product. That's not the question. The question is whether or not the tax does apply to the allowance at the final, at any point from production to final purchase.
Yeah, but an allowance is basically an input to a large business. The large business involved in commercial activity, they're allowed to claim back all the tax they pay on their inputs because they're going to charge tax on their final products when it's sold to a consumer.
Okay, so then the question is, very simply, after the rebates of GST, HST are taken into consideration, is GST, HST applied to the carbon allowance, yes or no?
What the amendment is in the Part 2 of the bill.
Yeah, I know what the amendment is, but and it is absolutely fair.
Yeah,
if I could finish, it is absolutely fair for us to ask you what is the general application of the rules in order that we might understand the amendments. And this is a yes or no question. Either it does apply or it doesn't apply. It really can't be neither, and it can't be both.
And Mr. Mursell may not be in a position today to answer that question, but coming back from the other committee, he may be. Go ahead, Mr. Mursell. The floor is yours.
Well, I don't think I can answer by yes or no, because in your question you mentioned the word rebate. I have not mentioned the word rebate. What the amendment does is when a purchaser of an emission allowance from another person will acquire something, that emission allowance, they will have to self-assess the GST, HST on the value of that allowance. When they're going to do their return, they're going to do their self-assessment, and then they're going to look what is the use of that allowance. And that allowance will likely be used in the course of their commercial activity, entitle them to an ITC of the value of the tax they would have self-assessed, and in the end, they will remit nothing.
So we admit the allowance costs money.
There's a price.
Right.
There's a market for it.
Fair. Does the HST, at the end of the day, apply on top of that price?
What the amendment does...
I'm not asking about the amendment.
But I'm here to describe what is in the bill. So.
Yeah, but in order for us to understand what's in the bill, we have to understand what the rules are. We need to understand what you're amending before we can understand the amendment itself, and I'm simply asking, does the HST apply on the price of the allowance, yes or no?
The HST apply, but the purchaser will be allowed generally to claim an offsetting input tax credit.
Right. And after that offsetting input tax credit is taken into effect, will there at any stage or by any person or entity be HST on the allowance? Yes or no? What is the net effect?
Mr. Marcel to yes or no answer. He's got...
Well, either it does or it doesn't. I mean, this is not one of those situations
yes,
where it could be a maybe.
Explain to that, Mr. Marcel.
Well, the emission allowance is like any other input for the business. When the business is involved exclusively in commercial activity, when they acquire something for whatever product they produce, they are entitled to claim ITC in respect of the tax they paid on the input they use in the course of their commercial activity.
So putting aside that entity, will any entity pay HST on the allowance? Yes or no?
According to the amendment, the only person who will pay the HST is the purchaser, and they will generally be entitled to an offsetting input tax credit.
Answer several times. We went down this road. We will hear back from the Environment Committee. Has to report back to us today by 4 p.m. whether they're going to study this or they're going to leave it totally with us. They then will report back to us after they've looked at it, if they agree to do it, on November 13th. We will have time between November 13th and 15th if we have to deal further with this issue. Mr. McLeod.
Yeah, Mr. Chairman, I'm not sure if anybody heard my question while I was asking it with all the interruptions.
It was rather noisy in here, and I was at fault as much as anybody else. Go ahead.
Well, we also got a response from the witnesses, and I'm satisfied that the question might be better posed under the section with income tax rather than this one, and I'll ask that question doing clause by clause.
I believe Mr. McGuire wanted in parts 2 and part 3.
It was just a schematics thing, I guess, Mr. Chair. You mentioned that we'd get the report back from the other committee on the 13th and have to deal with it by the 15th?
Yeah.
But we don't sit that week. Is that...
No, are that the right dates? That's for the amendments.
Yeah.
For the amendments.
Yeah, so we're in a constituency week that week. And
sorry.
I don't know if that makes a difference or not.
That's when they have to report their amendments back to us. We meet the next week.
Yeah, for clause by clause on the 20th.
For clause by clause on the 20th. Yeah. Point clarified. Any further questions then for these witnesses? Thank you, gentlemen. We'll go to, go ahead.
Oui, désolé. Merci, Monsieur le Président.
Thank you very much, Chair. Thank you, gentlemen. I do have a question to help me understand on the measure concerning the reimbursement of excise tax for diesel that was used to produce electricity. According to you, what are the facts and what is the argument that could underpin that change? As I said previously, this establishes a tax refund system that would allow a seller to ask for a reimbursement, for a refund, and to have the excise tax removed, but it applies only to distributors and producers who are licensed. They are the ones who can ask for the rebate, the refund, when they sell the diesel to the end consumer. The unlicensed ones do not have access to this mechanism, so they can't sell to the end user they have to sell with the tax included, even if that diesel were used for the generation of electricity, which is normally excluded from the tax regime. The effect of this is that under certain conditions, if they are met, non-licensed vendors can ask to have the rebate under limited conditions without having the excise tax included. So this is really a technical way to ensure that there is a fairness between all distributors in Canada. May I ask another question? May I ask another question? Do I have the time to ask another question? I'd like to have some explanation on the sale of books that were used for literacy courses. It seems that the excise tax is included at the head end of the system, but if you sell the books to the general public, there would be tax that would have to be applied. How can you audit this? How can you verify this in the real world? How will you know to whom the book was sold for those and for what purposes? The rebate, the refund exists. It's a GST or the federal part of the HST. There is a list of entities that are entitled to this refund of tax that is paid, but it is the federal component. Under the circumstances that are set out in the legislation. Now, what is the change that is being made? Before that refund, well, how can I say, it's not like a school book being bought for one's own purposes. It's not a book that, say, a school could resell. And we want it to be clearer that the property of that good cannot be transferred to another person or another entity to make that refund available. It's not a new rebate. It's the existing one.
Extensively, and I know the NDP has switched members midstream, but this answer was answered quite extensively and can be found on the Blues. We spent a considerable amount of time when Peter Julian was here on this, but I'll let you ask for clarification if you need it.
Non, c'est beau, la réponse me convient.
No, I'm quite happy with the answer. Sorry to ask the same thing twice.
Thank you, gentlemen, for parts 2 and 3, and we'll ask on part 4, Division 1, Mr. Scott Winter to come up on Oh, and there'll be another person,
Scott and
and Diane Kellaway. Welcome.
Mr. Chair?
Yes.
As we only have 10 minutes left, is there any intention or suggestion of extending the time because of the vote? I'm just not sure 10 minutes will be reasonable.
We would have to have complete agreement of committee. Let's see where we end up. The people we've asked to come, I think, are here through to the end of Division 5. It'd be nice if we could finish that much, but you folks will have to think about it. I know what people have other commitments. We'll check where we're at 11:45. If it'll only take a few more minutes to finish up a division, we might be able to do it. Larry?
Yeah, Mr. Chair, I know, just canvassing my colleagues, we've all got commitments at noon, so.
All right. We might be able to go 2 minutes over, though, if it'll
Sure.
finish a division. Okay, Part 4, Division 1, Customs Tariff Simplification. Go ahead, Mr. Winter, Ms. Callaway.
Thank you, Mr. Chair. Thank you, Mr. Chair. Recognizing the timing constraints, I'll give a brief overview so we can move quickly to questions. This measure, which is covered in clauses 69 to 126 of the bill, includes several structural simplifications and other technical amendments to the customs tariff with a view to easing administrative burden and red tape and reducing compliance costs for both importers and the Canada Border Services Agency, the CBSA. This measure was announced in Budget 2018, and it constitutes the government's response to the Auditor General's recommendation in the spring 2017 audit of customs duties to review and simplify Canada's tariff regime. There are effectively three primary groupings of amendments contained in the bill, the most substantive of which is contained in clauses 121 to 123, which consists of the elimination of several redundant tariff items in order to facilitate classification and administration for importers and the CBSA. As a result of these amendments, the measure reduces the overall number of tariff items in the schedule by just over 6%, significantly reducing the scope for misclassification by importers or government. The second category of changes includes several amendments to clarify the policy intent of certain provisions, such as tariff descriptions, in order to improve administrative predictability. And finally, the third grouping of amendments are primarily of a housekeeping nature. This would include amendments such as a renumbering of tariff items to reflect past changes, as well as amendments to English and French descriptions to address language discrepancies. The measure does not affect rates of duty for goods imported into Canada. As a result, it has no fiscal impact or impact on ongoing or future trade negotiations. And the measure would take effect on January 1st, 2019.
Any questions? Go ahead, Mr. Fragaskatis.
Thank you very much. Could you just explain a little further on the point about redundant tariffs?
Sure.
Tariff items, rather. What made them redundant, and how does the change improve things from an efficiency perspective?
Sure. At the global level, for customs classification, goods are listed at a 6-digit, it's called a subheading level. Individual countries have the ability to further subdivide those into 8-digit items to serve their own economic policy objectives or as a result of trade negotiations, for example. Since 2009, the successive Canadian governments have undertaken a proactive tariff policy where we've been undertaking significant amounts of unilateral tariff elimination, such as elimination of tariffs on imported machinery and equipment, production inputs, agri-food processing inputs. So what has happened as a result of those tariff reductions is that the 6-digit parent item is duty-free. We may have had a variety of 8-digit items with variable duty rates. These have all each become duty-free as well, so it's no longer necessary to have that level of specificity in law. So what we've done is effectively rolled up those items to the 6-digit level. And again, as I said, the benefit of that is for importers. It will reduce the scope for misclassification, the need to file for corrections, and it will also result in lesser need for enforcement resources by the CBSA.
Thank you.
Okay. All in, all done. Okay, thank you very much. And we'll turn to Part 4, Division 2, Canada Pension Plan, Ms. Giordano from ESDC. Floor is yours, Mr. Dano.
Good day. I'll keep this brief. This Division 2 provides for a minor technical amendment to the Canada Pension Plan that will modify the calculation of the child rearing drop-in in certain cases. The child rearing drop-in was introduced in BIA 1 and will be implemented in January 2019. This provision will increase the enhanced portion of the CPP for parents who stop working or reduce their participation in the workforce to take care of a child under age 7. So the proposed technical amendment will allow for the proration of the drop-in amount in rare cases when the drop-in does not apply to a full year. This would be the case when a person's contributory period begins or ends during a year in which the drop-in is applied. For example, where an individual reaches 18 in a year that the drop-in would be applied, or where an individual dies, begins his retirement pension, or reaches the age of 70 in a year in which a drop-in applies. I'm happy to answer any questions you may have on this.
Okay, think about it for a moment, folks. Any questions? Pretty straightforward. Go ahead, Mr. Fergus.
Madame Giordano, s'il vous plaît.
Madame Giordano, what clauses in the bill? What are the clauses in the bill where we can find what you have just said? What are their numbers?
Clause 127 to 129.
C'est ça.
To 129. Oh.
Merci.
Okay, thank you very much. You get off. Mr. McGuire has a question.
Just in looking at it, Mr. Chair, I'm wondering if there's a bit of explanation in regards to the modify the calculation of that amount to be attributed in respect to the first or second additional contributory periods. And you mentioned just an explanation on these years that you either turn 18 or turn 70 or pass away.
So the contributory period in the CPP starts at age 18.
Yep.
Ends when you pass away, you reach age 70, start your retirement pension. So these are the years. So if you have a child under age 7 in those years, we will need to prorate your contributory period and as well prorate the amount of the drop-in that we put in to reflect the period.
Yeah, if you're under 7.
Okay.
Thank you.
Thank you very much, Ms. Giordano. We probably can do tab 4 or Division 4. I know Division 3 is going to take some time because there's several sections to it. Might only take a few minutes to deal with Division 4. So if Part 4, Division 4, folks could come ahead. Ms. Hemmings, Mr. Beaupre, and Ms. Davidson. And that will save you folks from having to come back. I think Division 3 will take quite a while, or tab 3. So if we could do this one and then adjourn. And this is on Proceeds of Crime, Money Laundering, and Terrorism Financing Act. Go ahead.
Thank you, Mr. Chair. The Proceeds of Crime, Money Laundering, and Terrorist Financing Act is administered by the Canada Border Services Agency, or CBSA. It requires persons or entities to report to customs authorities when they want to, during the importation or exportation of currency of a monetary value over $10,000, $10,000 or more. The CBSA border agents have the ability to conduct searches where there are reasonable grounds to suspect that that person or entity is carrying unreported currency, or where they suspect that that there are proceeds of crime for or funds for terrorist financing. Those funds may be seized or forfeited by customs authorities. This clause essentially repeals a provision in the Act that gives persons and entities the ability to withdraw that export or import of the currency. So essentially, under the Customs Act, the right to withdraw does not exist for the declaration of goods. So what this provision is doing is it's aligning it with the Customs Act.
All right. Any questions on this area? It relates to some of the work we've been doing in money laundering for sure. No questions? Mr. Fergus? All right. With that, thank you very much.
Chair, could we have the clauses this applies to?
Yes.
174, 175.
174 and 175.
Thank you.
Okay, thank you very much. My apologies to those who are here for Part 4, Division 3. We'll have to start with you on the next day we reconvene. Thank you very much, all. Meeting adjourned.
Thank you.